Namaste friends, welcome to StockEdge. Myself Tufan from the StockEdge research team, and yes, StockEdge is a SEBI registered platform. So I'll start with 3 points. Gold is considered as safe haven. Number 1. Number 2, when US sneezes, the whole world catches cold. Number 3, developing economy or emerging economies always follows the developed economy, right? So I'll start with chart of gold, fine. So this is COMEX gold, you can see, and I have opened monthly chart in trading view. And since initiation, it is in trading view, we can see that it is from 1972. We have previous data also, but it is not that important. So what is visible to us in broader section is gold was consolidating since 1980 and gave a breakout around this 2007 level, 2007-2008 level, right? Now, what is going to happen in the near future? That is also very important, fine. So, over here there is also a pattern which is known as cup and handle pattern. Let me just explain you cup and handle pattern and what is going to happen in gold, and then I'll come and show you what might happen in S&P 500 as well. So please do watch. So you know cup and handle pattern, I'm writing it for you. Cup and handle. Cup and handle, fine. So this is the name of a pattern. So how it looks like? It looks like this. Fine. And if you want the price action also over here, so ideally this portion looks like the cup and this portion looks like the handle, and it is also termed as continuation pattern. Continuation pattern. Fine. So, how we should study this cup and handle pattern? Please do watch. So, this is basically the high, or just like the neckline of head and shoulder or inverse head and shoulder, fine. And this is the cup, this is the lowest point of the cup, fine. Now, you need to measure this height. I'm just changing the color of the pen. So, you need to measure this height, fine. Suppose this level is 100 and this level is 120. Then you need to subtract 120 minus 100 and add it from here. That means 120 plus 20, because this is the breakout level which is 120, right? And the subtraction that you have done is 20 points which you have added with this breakout zone, that is 140, fine. So this is the theoretical cup and handle pattern, but sometimes on chart we might not get theoretical cup and handle pattern. Let me show you that how it is considered in other cases. So I am also drawing another cup and handle pattern like this one which we have in gold chart. So it looks like something like this. I'm not very good in drawing all these things, but then again I'm trying to explain you as much as I can. I'm just changing the color of the pen. So this one is the cup, this one is the handle, and it looks like this. So why it is not theoretical? Because it is somewhat slanting, right? Hence, here how will you calculate? Some people calculate it from this midpoint to the low. But ideally, one should calculate from this particular point to this particular low, or from this particular high to this particular low. Fine. So if you calculate this also, then you need to add over here. The subtraction that you have got, or the point that you have received from this particular height, you need to add it over here on the upside. Fine. So यहाँ पे क्या है, around this zone, that is the low of this 1046. So the low is around 1046.54, and over here the high is around 2075. So this particular point is around 2075. So if you just subtract 2075 minus 1046 in round figure, you will get something, right? So you need to add this something from this breakout level, and this breakout level is around 2150. So this breakout level is around 2150. So you need to add that point with, so this something should be added with 2150 plus something, and you will get 3180. And interestingly, price is currently hovering around 3040. So still there is room for 4 to 5% on the upside around this level, 3180. Now why this 3180 is important? I'll show you. To validate my point, I have also used Fibonacci. Okay? So from these Fibonacci levels, we can consider that this 3180 or 3160 level is very important, because one level I have drawn from here to the lowest point over here, fine, and another Fibonacci I have connected from this particular point to this particular low, and there is a confluence of Fibonacci levels around this 3130, 3160, and this target, this cup and handle breakout target, is coming around 3180, right? So which is basically 4 to 5% still on the upside, which is remaining. Now let me show you another chart, and that would be very, very interesting. So this chart is from 1912, and we are standing in 2025, that is more than a century. This chart or this data reflects more than a century timeline. Fine. Now any person who looks at this chart will say that presently it is hovering around a major support, you see, right? If I just zoom in a bit, let me just zoom in a bit. So you see, previous instances also around this 1965, 1970, around this zone, it somewhat looks like this particular pattern, right? It came down, it also came down, and it was hovering around this zone, and it is also currently hovering around this zone. Perfect. Now, if it gives a breakout, it can move higher, lot on the higher side, on the upside. There is probability. See, any chart or any data or any technical analysis, these are not deterministic, these are all probabilistic. Fine. There is a probability that it might go on the higher side. So the degree of probability or the number of probability, I mean how much the probability is, you need to find it out. Fine. So by looking at this chart, we can say that the probability of this particular data or this particular chart is high to move on the upside. Perfect. Now what is this chart? This chart again is a ratio chart. Ratio chart of what? Ratio chart of gold, which is considered as safe haven, and S&P 500, which represents 500 stocks of the most developed economy, that is US, S&P 500. Fine. So let me just open the whiteboard again. So this is gold by S&P 500. Fine. And this figure is currently 0.53, just above the major support level, which is around 0.36. So it is currently around 0.53. Perfect. So any person who can read a chart or study a chart will say that there is a probability that this particular price action will move higher from here. So if it moves higher, that means 0.53 should increase, right? So if from this particular figure we see a upside movement, what will happen? What are the probability that is going to happen? Either gold will rise and S&P 500 will fall, right? This is one probability. There is also another probability that both of them will rise. That is, gold will also rise and S&P 500 will also rise. But in that case, the quantum of rise in gold should be higher than the quantum of rise in S&P 500. Then only that ratio chart will move on the upside. Correct? There is also another instance. That is, if gold and S&P 500 falls, that means gold should fall less and S&P 500 should fall more. In that instance also, that ratio chart will increase on the upside. Perfect. Because gold is directly proportional to this particular figure and S&P 500 is inversely proportional to this 0.53. Correct. And there is other permutation and combinations also. Like say for example, if S&P 500, that is SPX, stays at a particular level, it doesn't come down, it is staying at a level, fine, and gold has to rise, then also that ratio will rise. So in either way, gold has to outperform. That means gold has to rise more on the upside compared to S&P 500, and if it falls on the downside, then gold will fall less than S&P 500. Then only this ratio chart will move on the higher side. Now to validate this point, that what is the basis of my these words, let me show you and prove it to you that what has happened in the earlier instances. So this is the ratio chart on the higher side. Now you can see that this one is basically S&P 500, sorry, this one is gold, that is 3037, right? This one is S&P 500, that is 5675. And this one is that ratio chart, which is 0.53. Now just look at it minutely, that whenever gold was at the top, that means around this level, fine, around this level, when gold was at the top, that ratio started to come down and gold was also coming down. Gold also came down, this ratio also came down. Perfect. And when it started to rise, here it went higher, gold went higher, S&P 500 also went higher, but the quantum of rise in gold is greater than the quantum of rise in S&P 500. Hence, this chart, if I just zoom in a bit, you will see that it is moving on the higher side. It is moving on the higher side. Perfect. Now, if you just look at the current scenario, suppose you don't look at this chart, you just look this chart and this chart. what it looks like ideally that there is a possibility of gold to move on the higher side is greater than S&P 500, and S&P 500 is already turning down and gold is moving higher, all-time high, right? In the previous instances, another instance I would like to show you here, when it made a peak around this level, you see both of them came down. That is, gold also came down and S&P 500 also came down, but the quantum of fall was greater in S&P 500. Perfect. Now, in the current scenario, let us move to the current scenario, because current scenario is more important, or the most important you can say, compared to the global turmoil that is happening across the globe. So, though gold is moving or hovering at all-time high zone, but this ratio is hovering near its all-time support, you can say, or the major support level, right? If the either thing would have happened, then it would have been easier for us to confirm that gold is going to come down and S&P 500 will rise. But as this ratio is around the major support level and gold is also at all-time high zone and S&P 500 is turning down, there is a very high probability that this ratio will move on the higher side and gold will also move on the higher side, and this will come down. If gold doesn't move on the higher side, then it has to come down. In either way, gold has to outperform for that ratio to move on the higher side. So I guess I could throw some light, because gold is very important for us to predict the overall global market. And as I said earlier in the beginning of the this particular video, that when US sneezes, the whole world catches cold. So this particular chart which I have explained is not about 1 or 2 days or 1 or 2 weeks. This is all about the coming few months or maybe this year as well. So please do watch this particular thing very minute. Thanks for watching. Have a great trading session tomorrow. Goodbye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.